Hi everyone, welcome to the session. So, in yesterday's session, we discussed about procure to pay cycle and order to cash cycle. Okay, P2P and O2C cycles. In the P2P cycle we discussed. So, what is the process involved in the P2P cycle, and what are the departments will have their own responsibilities. Okay, before we get into this today's session, just we'll have a recap on yesterday what we discussed within 2 to 3 minutes. In P2P cycle, what we discussed here, everything just be replaced with applications where each application will support specific department. As a part of inventory department, or by using Oracle inventory applications, we can use we can maintain the items, and we can create the requisition, and we can process approvals based on the demand what we have in the organization, and that approved requisition will be passed to purchasing department. What purchasing department will do, based on the approved requisition, they'll create the RFQs, they'll raise the RFQs, they'll get the quotations, they analyze the quotations, and they'll choose the best quotation. Finally, they'll be placing the purchase order with approvals. Once organization receive the material, based on that, we create the receipt, or you can call as GRN. GRN stands for goods receipt note. And if any need of returning the material, will perform the purchase returns. Then finally, PO is going to share, our purchasing department will share GRN information with accounts payables department, or say AP application, here application point of view, AP. So once this AP gets the information from purchasing department, nothing but receipt information. So once we get into AP, we'll discuss very detailed level what are the different documents AP can receive from purchasing. But now to understand the process flow, we are taking example of receipt. So based on receipt information, AP will create. Okay, based on receipt information, AP creates purchase order. Purchase invoice, and based on the due date, the payment will be processed by AP department. And finally, if purchase invoice is related to asset purchase, AP will be sharing that information with FA, asset department. Based on asset invoice, FA, asset department will create asset in FA, and they'll be calculating depreciation based on the usage. The other side, the AP will be sharing payment information with cash management, CM. Based on that payment information, the cash management will perform bank statement reconciliation. Other side, they'll be maintaining the bank accounts also. The final, all the information will flow into general ledger application for financial reports preparation. Okay, and here based on this, the arrow marks which I given means the communication, how it happens, one way or two way, that I represented here. Okay, that anyway, when once we get into the application, you can understand very detailed level. Okay, the communication point of view, this is how data flows, and GL can have a communication with all these applications. Okay, that's what we call as just two-way communication. What is the purpose and all, everything we'll understand. And when I talk about OTC cycle, this is what we discussed. So in the OTC cycle, the complete sales process till we receive the payment from the customer. This is what we discussed. Once we receive the order from the customer, that can be recorded as a sales order by order management department, and based on stock availability or supply possibilities, we'll book the sales order. Okay, whenever inventory move the material from sub inventory to staging, that will be tracked as pick release. And when we move the material from our organization to customer organization, the same can be recorded by order management as ship confirmation. Any returns from the customer, that also can be tracked by sales department only, nothing but order management department, that we call as sales returns. Finally, the sales department, or you can call as order management application. Okay, your application point of order management, sales department will pass that information to receivables department, which information, ship confirmation details, Based on that, receivables department will create sales invoice. When they get the payment from the customer, that they'll record as a receipt, and the receipt information AR will be sharing with CM for bank statement reconciliation. Finally, all the information will transfer, or say will share with GL, general ledger application, to prepare the financial reports. Okay, this is what we discussed. Here primary applications are OM and AR in O2C cycle, and P2P, as we discussed already, inventory, PO and AP will treat as a primary modules or primary applications, or say primary departments, okay, as a part of P2P cycle. Fine. Now when you see these two cycles, how these are two are connected and working together. So this is the diagram we have. So so there is a in the P2P and O2C, the inventory will be involved, and cash management and general ledger applications. Okay, so these are the modules are involved. Already we discussed these applications are modules we called as financial applications, and these three applications, and we have other applications also, but we don't need to focus on that, we call as SCM applications. And here other point is we have multiple applications here. Out of all these applications, so GL, okay, this GL, anyway, GL means general ledger, we call it as general ledger only. Other than GL, all applications we call as sub ledger applications. Remember this point. All other than GL, all applications we call as sub ledger applications. Okay, what are the transactions or recording? All the transactions information we are going to share with GL. That means the total from different applications data will be within the GL, because we will be sharing. So total data will be here. When you compare with the GL, these all applications are subparts when you compare with the data which is available in the GL. So PO will have only purchasing department data, AP will have only payables department data, but when you look at GL will have all the departments data. That is the reason when you compare these applications with the GL application, these all are sub. Okay, these all will have a sub part of information compared to GL. That is the reason, except GL, all applications we call as sub ledger applications. Okay, just remember this term. GL is general ledger, all other application comes under classification of sub ledgers. So this is what we discussed in yesterday's session. Okay, let's get into today's session. In today's session, okay, so this is the agenda for today's session. In today's session, we'll go through the business transactions, how to record the business transaction, what are the key points we have to consider when we are going to record the business transaction, the system, or it can be in our application. Before that, normal generic process we'll try to understand. Okay, after that we'll look into ledger concept. What is the meaning of ledger, how the ledger can be managed, what we can do with the ledger. These are the points we are going to discuss. Now the first point is business transactions. Okay, business transactions. So it can be some books or system, whatever you take as example, how to record the business transaction. Here I given the simple example. Okay, the sample business transaction I taken here. So when you are going to record any business transaction, this is how you can record the transaction, very simplified manner. So first we'll capture the date when the transaction taken place. Okay, and the next section is account, the accounts information. Account information always represent what we did generally. Okay, what is the activity we did, that can be represented with the account. See here on which date, okay, 3rd Feb 2017, what we did, we purchased computers. The amount is 1 lakh, and for that we paid. And here I just given some description for the account for like more detailed information. Computer purchases for ARP3 Private Limited. And here you don't need to focus on debit and credit as of now to understand this example. Okay, the simple point here is we are just mentioning date and we are providing some description related to transaction. Description means which account what we did and it belongs to which company, and other information we are giving amount. You no need to get into debits and credits as of now. We have time to look into that. Okay, so that means we have simple three components as a part of business transaction. One is date, other one is account information or description of the transaction. The third component is amount. Okay, that means in every business transaction basically we'll have a very generic information I'm referring here. Okay, so the transaction components as we discussed now: transaction date, account details, and transaction amount. Okay, these are the three components we have as a part of transaction. Fine. Now what we have to understand is, if you are going to record the system, if you are going to record the transaction in our system, okay, this information should be ready in our system also. I want to record one transaction in our application. If I want to record the transaction in our application, what needs to be ready? What we have to keep ready to record business transaction in our system, that's what we are going to understand. So what we require to record the business transaction in the system: date we require, account details we require, or say description of the transaction we require. The other part is transaction amounts we have to enter in the system. These three components let's take as a primary components. There is one more component also that we'll understand going further. Okay, now let's focus on these components. Okay, the transaction date, account details, and transaction amount. These three components, okay, we have to focus. Fine. First, transaction date. In every transaction we have to capture the date. Okay, in every transaction we have to capture the date. If you want to capture the date in the system, what we need is, we need calendar. Okay, we have to maintain the calendar in the system. If you have calendar in your system, you can pick any date. You may record the transaction today or tomorrow or after some time. Anytime if you are going to record the transaction, if you have calendar, all the dates will be available so that it will be easy for you to pick the date. If you don't maintain the calendar, what are the dates you require, those dates may not be available readily when you are recording the transaction. So that is the reason what we need when we are creating the transaction, to capture the date on which date we are recording the transaction, we require calendar. Now the point is, if you want to create the calendar in the system, if you want to maintain the calendar in the system, what other points we have to consider? How to maintain the calendar in the system, that is the point we are going to understand now. So if you want to create the calendar in the system, what we have to understand is, first you have to understand for which country you are going to create the calendar. Take simple example, we are going to create calendar for India. Okay, say we want to create the calendar for India. So if you want to create the calendar for India, you have to understand the point, what is the financial year for India. So what is the financial year for India? India financial year starts with, what is when India financial year starts? April
1st.
If you take current example, okay, current financial year, so that is, we are in which financial year? April 2000. We are in which financial year?
16.
April 2016 to March 2017. We fall into this financial year. Fine. So that's what we have to understand. If you are going to create the calendar for USA, so we should know what is the financial year for US. US financial year starts with John. So the current financial year is 2017, right? Jan to December 17. for any country. Why we have just for which country client we are going to do this Oracle apps implementation for that country. Okay, financial year we should know. First point, if you want to create the calendar in the system, the first point, you are going to create the calendar for which country? Okay, India. Then you should know what is India financial year. If you are going to create the calendar for a US client, you should know US calendar year, I mean to say financial year. Okay, done. So after knowing that, what you can understand is, as per system or in generic way also, okay, these financial years are classified into two types. The financial years are classified into two types. Simple. Okay. Okay, financial years are divided into two types. So generic one. Okay, the financial years are classified into two types. Those are fiscal year. The second one is calendar year. Now simply I can call as per calendar, or I can say based on financial years, okay, we have two type of years. Those are physical year and calendar year. What do you mean by physical year and calendar year? It's very simple. Physical year means if any financial year is starting in one year and ending in the other year, that we call as physical year. See, everything based on the financial year only here. If any country financial year is starting in one year and ending in the other year, that we call as physical year. If country financial year is starting and ending in the same year, that we call as calendar year. Okay, if country financial year is starting in one year and ending in the other year, that we call as physical year. If country financial year is starting and ending in the same year, that we call as physical year. If you take example of India financial year, India financial year is starting in here, this example, April 2016, but it is going to end the next year. And if you take US financial year, that is starting in 2017 and ending in the 2017. So just now we discussed, if any country financial year is starting in one year and ending in the other year, that year type you call as physical year. And if financial year is starting and ending in the same year, that we call as calendar year. So what is the best example for physical year? Which country calendar? Which country financial year we call as physical year? India. India. So calendar year best example is USA. And if I say there is one country, their financial year starts December, say 16, it ends November 17. Okay, anyone please tell me, this is which type of year? We have two type of years.
Fiscal year.
Why we are calling
Fiscal year.
why we are calling as physical year? The reason is only the simple point, it is starting in one year and ending in the other year. We didn't discuss any point which financial year is starting in April and ending in the next year of March. That only we call as physical year. That point we didn't discuss. The generic point we discussed, it should start in one year and end in the another year. That only we call as physical year. That can start at any point of time, but it should start in one and should end in another year. That only we call as physical year. Doesn't matter in which period that is starting and in which period of next year that is ending. Okay, so this is a simple point we have to understand. So to create the calendar in the system, what we have to understand, which year type you have to use. If you are going to create the calendar, you have to decide which year type we have to use for the calendar. Now if you are going to create calendar for India, which year type will be using? Physical year. By using the physical year you can create the calendar for India. If you are going to create the calendar for US, you will be using the year type called as calendar year. This is the first point. The second point, after finalizing the year type, you have to finalize on period type. Okay, period type. So how many periods we can have in our calendar? Anyone? How many periods we can have in our calendar?
4 periods.
12 periods. Any other answers?
Four periods.
4 periods. Okay, noted. Yes, 4 periods.
4 and 2.
2. Any other answers?
4 and 2.
Okay.
Quarterly and half yearly.
Okay. Any other answers? After answering, please, my request is always, after answering immediately, please mute from your side, please. Okay.
Prankster.
Yeah. How many periods we can have in the calendar? Okay. How many periods we can have in the calendar?
Generally 12 periods and one is adjustment kind of.
12. Okay. Okay. We have multiple answers. All are correct. Okay. Here the point we have to understand. Okay. When you talk about how many periods we can have in the calendar, that always depends on what date range you are selecting as a period. That we call as period type. If you are going to follow the period type as a monthly, if you go with the option called as monthly, definitely will be having 12 periods in the year. If you say daily, day if you are going to treat as one period. If you treat month as one period, 12 periods in a year. If you treat day as a, I'll say day. Here if you say month, if you treat month as a period, 12 periods total. If you treat day as a period, you'll have 365. If you treat quarter as a period, 4 periods. If you treat week as a period, 53. If you treat some other specification, offerly as a, if you treat 6 months as a period, you can have only 2. So this is how you are going to consider your period. Based on that you can have number of periods. Okay, as per business, the generic practice would be, we see in the business, will month we treat as a period. In that case generally will have a 12 periods. Okay, but in terms of reporting, you can have a reporting, quarterly reporting. In that case, for reporting purpose you may have a 4 periods. The other purposes you can just come up with your own period definitions. Okay, but generic practice would be, if you take period type as a monthly, if you treat month as a period, we'll be having the 12 periods. It can be any year type. It can be physical or calendar year type, whatever it may be. Okay, physical year type or calendar year type, whatever it may be. Month if you are treating 12 periods, here 12 periods. That means in our calendar we are going to create 12 periods. So say this India means April to March, USA means Jan to December. Fine. If I take month as a period, max, so generally it's not like minimum or max, it's always 12. But in our system we have a flexibility, you can have more than 12. If you are taking month as a period, generally we can have 12 only. But in our system we have a flexibility, you can have more than 12 also. If you are taking the period as quarter, we can have only 4 periods. But in our system we have flexibility to have more than 4. Okay, this is how we have flexibility. Why we got this flexibility? To have more than actual. And what we call, if we are going to have more than actual, so that we call as, we'll talk about what we call, then we'll discuss what is the purpose. Say for example, we are going to have a period type called as month. In that case, you can have how many months? 12 months. But in our system, you can create more than 12 months. That means you can, generally month means you can have 12 periods. If you are going to have more than 12 periods, those periods we call as adjusting periods. Say if I am going to create the calendar with 13 periods. Okay, my calendar is going to have how many periods? 13 periods. I am going to use the period type as month. Month I am treating as one period. In that case, I can have max 12 only. But I am going to create the calendar with 13 periods. That means one additional period I am taking. The additional periods, whatever you create in the system, those we call as adjusting periods. That we call as adjusting periods. What is the use of adjusting periods? In the business, if you want to pass some adjustment entries, instead of passing those adjustment entries in actual periods, you may maintain separate period called as adjusting period, so that system will support and even you can track those adjusting transactions or entries separately in the respective period. The simple point as of now is to maintain the adjusting periods separately in the system, you may have additional periods called as adjusting periods. The general practice would be the year end. When we are closing the periods, when we are closing the periods in the year end, we can have one additional period to pass adjustment entries. So this is the reason in our system we have a flexibility of maintaining the more than actual periods. So if I am going to create the account calendar, monthly calendar, I can have 12. Okay, generally we can have 12, but I can create my calendar with 14 or 13 or 14 or 15. The additional we call as adjusting periods. Adjusting periods always will help us to pass adjustment entries. If I'm going to have my calendar with quarter as a period, normally we can have 4 periods. But for each quarter, I can have one additional adjusting period. In that case, for each quarter, if I want to one additional adjusting period, I can have total 8 periods. First quarter, one adjusting period. Second quarter, another adjusting period. Third quarter, fourth quarter, this is how we can have additional periods. Those we call as adjusting periods. The same when you are going to have monthly periods, you can have 1 or 2 or more than how you generally require. Okay, we'll focus on that more and more when we are creating the calendar. Okay. So just this is what we have to understand when we are going to create the account calendar. Okay, simple point is when you are recording the transaction, you have to track the date in the each and every transaction. To capture the date, we require calendar in the system. When you are going to create the calendar, you have to consider 2 points. Year type. When you are creating the calendar, okay, when you are creating the calendar, you have to take the decision on which year type you have to use and which period type you have to use. Once you decide these 2 points, you can go ahead and you can create the account calendar. The calendar which we create in our system, okay, that we call as accounting calendar. Remember, okay, we call it as accounting calendar. That means if you have accounting calendar in your system, that will help us to pick the date when we are creating any transaction. If you want to create accounting calendar, you have to take the decision on which year type and which period type. Say I want to create accounting calendar for India. Which year type I have to select? Physical. And period type, general practice is monthly. So I'll select year type as a physical, I'll select period type as a monthly, then I can go ahead and I can create the accounting calendar. When we are going to create accounting calendar, how we'll create the accounting calendar in the system? So I given one slide here for your understanding. So this is how accounting calendar looks like when we create in our system. Just I am showing the slide. Anyway, we will be creating our own accounting calendar. So just will provide the name I just given as a ERP accounting calendar and description erpt.com accounting calendar, and here period prefix short name, just first initial letters, okay, as a short name April. Okay, this is the actual name, period name April 2015. When you say April 2015, when that April period starts, 1st April 15 and ends with 30th April 15. May period, May 2015, when the period starts and ends, 1st May 15 and ends with 31st May 2015. In the same way, the period names, these we call as period names, the period start date and end dates. This is how we can give. When we are creating the accounting calendar, I will explain you all the other fields related information also. Just I want to just show you the slide how it looks like. That's it. Okay, so these are the simple points we have to understand before we go on to create the accounting calendar in the system. Okay, so accounting calendar in the system. To create accounting calendar, this calendar only we are calling as accounting calendar. Whatever the calendar we'll create in the system, that we call as accounting calendar. Reason is, by using that calendar we'll use to capture the date. By using the date, we'll account the transaction. We'll create the accounting entries for the transaction. We'll record those transactions. That is the reason we are calling as accounting calendar. Okay, the simple question is, if you want to, on what base you'll create the accounting calendar? Okay, based on the year type and period type, you can create the accounting calendar. That's it. Fine, done. We're done with the date part. To record any transaction, date is required. To capture the date, we have to create the calendar. To create the calendar, year type and period type you have to decide. Then by using the year type and period type, you can create accounting calendar. How the accounting calendar looks like? This is a sample accounting calendar. That's all. Okay. Hope it is clear to everyone. Okay. Done. So what is the next component? That means here just now we discussed transaction date, how you can capture. If you want to capture the transaction date, we require accounting calendar. By using accounting calendar, you can capture the transaction date. Now the next point is account details, or say description of the transaction. How to capture the description of the transaction? Okay, let's take simple example here. I take in the slide what information I given. The date we can capture by using accounting calendar in our system. Now we have to talk about account section, or say description of the transaction. If you want to capture the description of the transaction, what you have to do is, first of all, you have to maintain all the information. So you have to decide on, say for example, I am purchasing the laptop. I'll write today's date. Okay, 3rd Feb 2017, laptop purchase 25,000. Okay, I'll write like this. So company point of view, if you write in this way, it is not meaningful transaction. It is not meaningful transaction. Why? Here I written 3rd Feb 2017. Okay, it's very clear. And here a description I written what we did. What we did, laptop purchase. Okay, I'm just writing the account. But here, when you talk about company, as a part of organization, there can be multiple entities. Okay, multiple entities. Your entity in the sense maybe different businesses, or you may just understand different branches. Okay, if I say laptop purchase, say we have a 4 branches. In which branch we purchase a laptop? there is no information in this. Okay, say we have only one branch, so just we can understand, okay, in that branch only we purchase, even if you are not going to write as a part of the transaction. But we may have, definitely will have a multiple departments. Okay, multiple departments. If I write laptop purchase, which department purchased it, or else for which department this laptop is purchased, there is no information. Okay, that means, so when we are writing the description details of the transaction, it's not very meaningful. We are writing laptop purchase, we are not writing for which company we purchased, for which department we purchased. So you have to write the detailed information. So when you are recording the transactions belongs to which company, which department. Okay, all the information you have to mention, including the account. Anyway, laptop purchase is one of the account name. What activity we are doing, that activity always will be represented with account generally. So here the information is missing. The company point of view, it has to be more clear. Okay, the date is clear. When you talk about what you did, it should be more clear. So fine. Here just I'll take simple example. So I'll take companies like, so we'll take our example ERP3. So for example, ERP3 is doing different businesses. I'll say ERP3 consulting services. I'll say ERP3 software development, and I'll say ERP3 BPO services. So now ERP3, or say ERP3 group company, or anything you can treat. The enterprise name is ERP3. The ERP3 is involving in 3 line of businesses. Okay, or 3 vertical of businesses. So they are into consulting services, software development, and BPO services. Normally, when we are going to record the transaction, you have to select the laptop purchase is happened in which company, consulting or software or BPO. These 3 you can treat as 3 entities. 3 entities. Okay. So these are the 3. Fine. Now we have 3 companies. And again, okay, and I'm recording the transaction. I can select any one of the company name. Okay, that would be fine. And I should specify, when you talk about consulting, say I selected consulting services, the entity or the company called as ERP3 consulting services purchased on laptop. Within ERP3 consulting services, you can have multiple departments, and you have to specify this laptop purchase taken place in which department also. So for that, let's take a simple example. Say this, we have a multiple department, say finance department, say marketing, HR, sales, say R&D, research and development. This is how we can have multiple departments. So just I'm listing out here. Fine. So we have these 3 companies, and say we have 5 departments. And now what we have to keep ready, across these companies and these departments, what are the different activities we'll be doing, all we have to manage as a accounts, right? So I'm just going to maintain the accounts. Say cash account, some purchases account. It can be any different purchases. It may be something like laptop purchase, some furniture purchase, anything. We'll have different accounts, but I'm going to take few basic example for our discussion. And say there is another account called as salaries and expense. Okay, this is how you can have a different accounts which will represent what activity you are doing in this company. Now if I keep this information ready, okay, if I keep this information ready, okay, easily we can go on to record the transaction very detailed level. And one more point, what I'll do is, for each company I'll give the number. I'll give number as 1. This is company 1, this is company 2, and this is company 3. This is the department 1, department 2, department 3, department 4, department 5. The same way when you talk about accounts, account 1, account 2, account 3, account 4. Okay, this is how you can have multiple accounts, multiple departments. You may have multiple companies also under one group company or enterprise, whatever. Okay, now if I am going to record the transaction, now I can specify more detail level. On 3rd Feb 2017, I purchased a laptop. Okay, here I can give which company. If I am going to give, say, ERP3 Consulting Services is purchasing the laptop for which department, say marketing department, and I'll be selecting the account. This will be more easy for us. I may write the transaction now in the very detailed level, saying that on 3rd Feb 2017, what we are doing, we are purchasing the laptop. Now instead of going and writing very detailed level, I'll say 1. That means first company. I'll put just dot here. 1, 2, 2 means marketing. What we are doing, laptop purchase. I'll put 2. That's all. So I am just giving the numbering. Okay, each number has some information. It will refer some value. Okay, it will refer some object. It can be company or the first one I am representing with the company. I am just given, okay, on 3rd Feb 2017. Okay, 1 means so company 1. Here 2 means department 2, and here 2 means account. So by seeing that, I can understand detailed information. I may write directly ERP3 consulting and finance department and laptop. That also I can write here. Instead of writing, I'm simplifying by giving some code for that. So if I write 1, 2, 2, anyone can see and understand, okay, on 3rd Feb 2017, ERP3 consulting services, okay, for marketing department, they purchased one laptop. So this we call as very meaningful transaction. So if you want to write this kind of meaningful transaction, okay, if you want to create this kind of meaningful transaction in the system, we have to keep ready all the information in the system. If you keep this information ready, then anytime you are going to record the transaction, simply you can take this information as a part of transaction. Okay, say for example, we are paying the salaries. Okay, when you are paying the salaries, you will be paying the salaries, sales, some finance department. Okay, or say payroll department. So payroll department will be paying the salaries. So I'll take payroll department here. Now payroll department is going to pay salaries for company consulting services. In that case, simply I can record the transaction here. Okay, date, I'll say consulting 1. I'll take here payroll department as just payroll department number is 6. And what the payroll department is doing, they are paying salaries, means 3rd 3. That means 163 means simply you can understand because you have all the information ready. So company 1 consulting services, 6 means 5 in consulting services, payroll department, what they did, 3rd salaries paid. That's it. So this is how you can record the transaction very descriptive manner. If you want to record any transaction in more descriptive manner, what we have to do is you have to maintain how many companies we have, what are the departments we have, across these companies and department, what are the different activities you do, all the activities related accounts you have to maintain in the system. Okay, so this is how you have to maintain. If you are going to maintain this information in the system, okay, there is some naming convention which will be giving for these set of data. Okay, now let's go with a very generic way. So you just tell me for all these values, for all this information, what title we can give. You tell me here which title we can give. Anyone? This is a simple question. My all questions are simple always. Company. Done. For this, what title I can give? Department. For this?
Account.
Account. Done. Okay, thank you. Fine. So based on information we are giving titles. Okay, based on information we are giving titles. These all are companies, so I'm just giving the title as company, or you may give as a companies. These all are departments. You can give the title as it's a department related information. You can give title as a department, or you may give as a departments. And this is all information related to accounts. You can give the title as account or accounts. Anything you can give. Fine, done. The same way, if you are going to do some expense, or if you are going to do some transaction in your company that is related to some product, you may maintain here all your products here, and you can give the title as a product. Okay, that will discuss more detail level after some time, but now we will go in the very generic way for our better understanding. Okay, fine. So this is a case now. Now if you are going to record any transaction, simply you can specify on which date the transaction belongs to which company, which department, and which account. This is how you can write. Now tell me, so okay, by seeing this title I can understand these are companies, these are departments, these are accounts. Now this total information belongs to which organization? There should be some title for the entire information, right? So that I may write as, okay, I may write it as ERP3 group. Okay, fine. Just what information I'm giving? ERP3 group. When you talk about ERP3 group, under that group we have multiple businesses: consulting, software development, and BPO services. Okay, fine. It's clear, right? This information, company information, you given title. This information is related to departments. For that you given some title. This information related to accounts, you given title. But this total information, all these companies, departments, and accounts are belongs to which group company or which enterprise? ERP tree group, or you may call it as ERP tree enterprise. Anything. How you will be just having naming convention, accordingly you can give it. Okay, enterprise. Okay, so anything, just it can be ERP tree group or ERP tree enterprise. Okay, so that's how just you can specify. Okay, just we are giving the title. Done. Now here the simple information we have a group company called as ERP3 group. Under that company we have three companies, say just example 6 departments, and we'll be having hundreds of accounts for sure for any company, but just I'm taking here 4 accounts. So if you notice here, you can find some hierarchy. You can find here some hierarchy. We have a ERP3 group. Under that group we have companies, departments, and accounts. Under companies we have these 3 accounts. Under departments we have the 6 departments. Okay, under departments we have 6. Under accounts we have these accounts. The same information, if you are going to maintain in the system, okay, the same information if you are going to maintain in the system, will give some naming convention for this. Will give some naming convention for this. So the titles what we given here, okay, the titles what we given here, these titles we call as, okay, these titles what we given here, so simply we call as segments. Make a note, what we call segments. Why we are calling as segments? Because these titles only segregating the data which is related to this group. Okay, so we are segmenting, we are classifying. Okay, this data is company's data. With this title we are segregating the data as this data is department's data. With this title we are segregating the data, these all are accounts. So that is the reason These titles are helping us to segregate and to maintain one group company data. So that is the reason the classification, this is, you can say other words, classification. We are classifying the total company data as a, okay, this data is company's data, this data is all information related to departments, this data is accounts data. That is how we are classifying. The classification only, in other words, we are saying as a, we are segmenting, we are segregifying. Okay, so that is the reason these titles we can call as segments as per our application. Remember that. So now how many segments we have? 3 segments. This is company segment, this is department segment, this is account segment. Okay, so here general way we are discussing, these are the titles, but when we are going to create the same in the system like this, the same titles in the system, you should call it as segments. For any data, it can be companies or departments or accounts or anything else, it can be products or it can be locations, whatever it may be. For some set of data, for a different classification of data, if you are giving any title, that you call as segments. Now we have 3 segments. Okay, now under segments, what we have? We have the segment related information. We have the system point of view, whatever you enter normally we call as value. Okay, value, these all we call as values. Which values these are? These all are company values, these all are department values, these all are account values. For these companies, departments and accounts, we given common name, segments. That means this is a company segment, this is a department segment, this is account segment. When you call it as company segment, under company segment, what are the values we have? We can call as company segment values. These all we call as company segment values. These we call as department segment values. These all we call as account segment values. That means under any segment, whatever you have, those simply you call as segment values. Segment values. Which segment values? Those values are under which segment? Those segment values. These are company segment values, these are department segment values, these are account segment values. So when we are maintaining this information in our system, this is how we'll be calling. Fine. So we have segments, these, and we have segment values, these. Okay, here also you can see that. Okay, we have these titles, under that this information we have. These only we are calling as segments. Under this we have some values. These we are calling as segment values. Segments and segment values. For the segments and segment values, we have some title. Okay, the title will represent how the information is structured in the company, how it is structured and organized as a company's departments and accounts. So the name which you are giving for this entire information we call as organization structure. We call as organization structure. It's very simple. The group, okay, or else the enterprise. The enterprise name or group name we are calling as organization structure. Under the group, what are the titles we have? Those we are calling as segments. Under the titles, what are the information we have? We are calling as segment values. Okay, it's very simple now to understand. If you want to maintain any information, this kind of information in the system, first we have to create all the information belongs to which group company or enterprise that will be creating as a organization structure. Nothing but it belongs to the total information belongs to which company, which group or which enterprise. Once you give this enterprise, once you create the organization structure, nothing but company name only. Okay, so within that we'll be creating all these titles, nothing but we call as segments. After creating the segments, we have to create this information that only we are calling as segment values. Okay, the system, if you want to maintain this information, first you have to give the organization structure. The titles only we are calling as segments. We have to create segments. Then finally we can maintain the segment values. Directly you cannot go and maintain. However, I written in this spreadsheet in the same way you cannot maintain in the system as a direct segment values. If you want to maintain the segment values, before that you should have a segments, and if you want to maintain the segments, before that you have to create the organization structure. That means first you have to create the organization structure, nothing but company name, group name. Under that organization structure, under that you have to create the segments. Under segments you can create the segment values. Okay, under that you can create the segment values. So first we have to create the organization structure. Under that segments you have to create. Under segments you can create the segment values. So these three we have to create. This is a hierarchy we have to follow. First, organization structure. Under organization structure, segments. Under segments, segment values. First, you cannot change this sequence. You cannot change this hierarchy. So if you want to create, now I written all these things, all the information here. How I written? Because I am using feature called as spreadsheet, right? I'm using feature called as spreadsheet. By using feature called as spreadsheet, I'm able to write all this information. If I don't use this feature, I may use, say, Word, or else I may use Notepad. When I use Notepad, that may not be this much flexible to write it. That means anyway, whatever it may be, I'm using some feature to write all this information here now in our class. In the same way, if you want to maintain all this information in our system, if you want to maintain organization structure, under organization structure segments, under segments segment values, if you want to maintain all this information in our system, there should be some feature in our applications also. Okay, to maintain all this information in our system, there should be one feature which will support to create organization structure, segments and segment values by following the same hierarchy. So that future name is, okay, the future name is accounting key flex field. Hope everybody is taking the notes. If you are not taking the notes, your learning will be totally different. You cannot see that expected results what you are expecting from the classes. The guys who are taking the notes, definitely they can review anytime and they can go through it and they can refresh and they can remember all these points. So if you are just attending the classes, that's a different learning totally. Okay, I'm expecting everybody is taking the notes. Everybody have some pen and paper for sure. Okay, because we may be experts in the respective areas where we are working, but we are very beginners what we are learning now. So that is the reason you should start taking each and every point. And you have to read it one or multiple times, and you have to remember it, and you have to speak with when it comes. I mean, when you go for interview or in generic way, you have to memorize it. Then only it will work. By just attending the class, by just going through one time once again video, the playback and all, you cannot. Okay, fine. Anyway, we know that these points, but just I'm trying to just once again I want to discuss with you. That's all. Fine. So if you want to maintain information like this in our system, okay, these are the naming conventions we have. Okay, to create the organization structure, segments and value sets by following the same hierarchy. Okay, which feature will be using? Accounting key flex field. That means by using accounting key flex field, we can create organization structure. Under organization structure, segments, under segments, segment values. Under segments we can create the segment values. So what is the meaning of organization structure? The segments and value sets only we call as organization structure. If these are not there, what is the structure we have here? If I don't have this information here, if I put this name, if I call it as my organization structure, it's a blank, nothing. That means when we have these segments and when you have the segment values and segments, that combination only you call as organization structure. But just we are giving title. So all these structure name, okay, organization structure name, nothing but company name. Okay, organization structure name or organization structure and segment values, all this where we can create in our applications by using accounting key flex field. You don't try to understand what is the accounting key flex field, in which color that we can find and something else. Don't try to understand, just try to, I'm trying to introduce the naming convention, that's it. I'm not going to give you too much information here for your understanding, nothing. Just what I'm trying to do is I'm trying to introduce the naming conventions. Don't try to understand more than that from this class. Okay, after completing this class, if you are aware of these naming conventions, that is enough, that is a target. Okay, so if you want to create organized structure, segments and segment values, all this information in our application, what feature will be using? Accounting key flex field. Now simply I can say, by using accounting key flex field, we can create organization structure. I can say, when I say organization structure, within that we have segments and segment values, or very in detail level I can say, by using accounting key flex field we can create organization structure. Within that we can create segments and segment values. That's it. Okay, done. So by using this we can create these three. And when you say we have some future in our application, the future should belongs to specific application. We are discussing, there is a one feature called as accounting key flex field. Okay, when you say accounting key flex field, the future should belongs to some application, that should belongs to AP or AR, CM or FAR, GL, some other application. Already we discussed what are the different applications we have as a part of our financials. We discussed we have primarily 5 applications: GL, AP, AR, CM and FA. So this accounting key flex field should belongs to any one of the application. So this accounting key flex field future is available in general ledger application. Okay, anyway we know that. Okay, that is application only, general ledger means. Okay, we have application called as Oracle General Ledger, right? Fine. Oracle General Ledger application we have. So we call it GL only. We don't add as a OGL and all, because Oracle just started this O. We don't need to write like that. This is a short name. Oracle just that's what they delivered, the naming convention. So Oracle General Ledger means GL. Okay, that means we have an application called as Oracle General Ledger application. Within that application we have feature called a accounting key flex field. Within the accounting key flex field we can create organization structure and segments and segment values. Hope it is clear to everyone. We have application called as Oracle General Ledger. Within the General Ledger application we have accounting key flex field. Within the accounting key flex field we can create the organization structure. Within the structure what we can have? Segments, under segments, segment values. There are few more points also to add this points, but this is not right time to discuss those. That is the reason I am not including, but try to understand what we are discussing. Once we reach that concept, actual concept, you will be getting each and everything. Okay, don't worry, there are few points to add here, but I don't want to confuse you by adding here now itself. I'll just find the right time when and how and where you can understand in our throughout our classes and discussion. There I'll be including. Okay, that's it for now. These are the points you understand. I'll just drive you in the easiest way how easily you can understand. Done. So in general ledger application GL we have a feature called as accounting key flex field. Within that you can create organization structure, segments and segment values. These three components, organization structure, segments and segment values, these three what we call is, let me mark it. Okay, so organization structure, segment values, these three we call as chart of accounts. What we call these three we call as chart of accounts, COA short name. Okay, organization structure, segments, segment values. These three put together we call as chart of accounts. What do you mean by chart of accounts? Chart of accounts consist of organization structure, segments, segment values. Now my simple question is, how can we create the chart of accounts? Where we can create the chart of accounts? Anyone?
Accounting key flex field.
That's all. Okay. Okay. If you don't mind, see if there is some background noise. Generally, I don't accept any kind of communication in the classes. Okay. So where we can create the chart of accounts? The chart of accounts we can create by using accounting key flex field. Where we have accounting key flex field? In GL. It's very simple. We have GL application. Within the GL application, we have accounting key flex field. Within the accounting key flex field, you can create the chart of accounts. When you say chart of accounts, this you can create. That's all. Okay. Why we are calling a chart of accounts? If I take this example, that means this set of information only we are calling a chart of accounts. Company name, group name, the titles and information. For this only we given this naming convention. The group name, as per our system, we are calling as organization structure. This is system naming convention. And these all titles we are calling as segments. These are all the data we are calling as segment values. Okay. That means this total data we are calling as chart of accounts as per our system. So that means chart of accounts means this information. When we have this chart of accounts information, you can record any transaction in easiest way by providing the detail information. Okay, by providing the detail information. So when you talk about the transaction, so this is how we'll be recording the transaction. For date, to capture the date, we have a calendar, already we discussed. And to write the detail information here, the computer purchases or belongs to which company, which department, all the information we have to maintain in the system. All the companies, all the departments, all the accounts we have to maintain. For all those we have to put the titles. For all the titles are belongs to which group company, that we have to give the group name and the titles and the information. All we are calling as, just I'm requesting everyone not to unmute. I don't know, just in the middle of class somebody is unmuting and we can hear that noise. Okay. So here, instead of just capturing the account computer purchases, to keep the transaction more meaningful, we have to capture this transaction belongs to which company, which department, exactly which activity you are doing. If you want to capture all this information, this is how you have to maintain the information in the system. This is how to maintain information this way, in this information in the system. How you can manage this information in the system with these titles, with this in the naming convention. Group name as a structure name, titles as segments, and this is total information as segment values. These three components here we are calling a chart of accounts. That means if you have chart of accounts, means you have all this information. Okay. And where we have chart of accounts? In accounting key flex field. Where we have accounting key flex field? Within this application, general ledger application. So that means simple point I want to say here, by using the chart of accounts, you can write the detailed description of the transaction. You can write the detailed description of the transaction. If you want to create the chart of accounts, what we have to do? First we have to create the organization structure, then segments and segment values. What is the meaning of organization structure, segment values? Already we discussed here. Any question on this, please? To capture the date, calendar we have to maintain in the system. To capture the detailed information of the transaction, we have to create and maintain chart of accounts in the system. In short, we call it COA, chart of accounts. Another point, why we are calling a chart of accounts? When you look at this we are calling a chart of accounts. Do you see only chart for accounts? We see chart for companies, departments also. Why we are directly giving the naming convention? This is a chart for accounts only. Out of all these, account is very important object in the transaction. Of course, what you are doing, that's very important. Along with that, yes, For the activities belongs to which company department also important, but very primary is what we are doing. That is the reason the naming convention they given as chart of accounts. Otherwise, if they are going to give chart of company, chart of department, chart of account, really it won't be good to just use in the kind of any process, right? So that is just they given the naming convention as chart of accounts. When you say chart of accounts, along with the accounts, we are considering other elements of information also. Okay, the simple point is by using the chart of accounts, we can capture the description of the transaction. If you want to capture the transaction description, first you have to maintain all this information by using the chart of accounts. Okay, fine. Any questions on this, please? So account details. To maintain more detail level, we require chart of accounts in the system. COA. Now the other point is transaction amount. Fine. So okay, I'll just give the date by using the calendar, and by using my chart of accounts, I'll write here very detailed level. Company name, department name, account. Okay, fine, done. So date is okay. I'm giving the fully complete information. When I talk about account details, by using the chart of accounts, I'm going to capture very detailed information. Good. Now here I have amount. I have amount. When I see these amounts, it's not that much more meaningful information. I can see here 1 lakh. What is this 1 lakh? 1 lakh is rupees or dollars, dinars or dinars or something else. There is no information. That means when we are recording the transaction, when we are just entering some amounts, okay, when we are entering some transaction amounts, you have to specify. You have to specify the amounts are representing which currency. Okay, the transaction, when you say transaction amounts, the very important point is the transaction amounts are belongs to which currency also you have to address. Okay, that is another important point. Okay, the amounts are belongs to which currency also you have to specify. Currency. Okay, fine. For transaction date purpose, we have a calendar. To capture the detailed information of the transaction, we have a chart of accounts. Now, when we are entering the amounts in the system, the amount should be represented with the currency. The amount should be represented with currency. Okay, good. So, say for example, we are doing the business in India. We are doing in the sense, take always our client for whom we will be working. Okay, or take as just our example only, no issues. So, we are doing the business in India. When we are doing the business in India, you will be recording the transaction in which currency? Indian rupees. Rupees means simply you can say INR. INR, Indian rupees. If you are doing the business in US, you will be recording the transaction in USD. Okay, United States dollars. Okay. In the same way, if you are say you are just doing the business in UAE, okay, so you will be taking using the currency called as you will be recording the transaction AED. So depending on in which country you are doing the business, and accordingly you will be recording the transactions. Now let's take the example. We are doing the business in India. When you are doing the business in India, the INR, okay, INR, okay, or else let's take simple example here. So let me go in different way. So say for example, here I am giving 10,000, here I am giving 20,000, I am giving 30,000. So if I ask you the question, what is this 10,000, 20,000, 30,000? You cannot give any very exact answer because I didn't write anything against those values. Just I written 10,000, 20,000, 30,000. Simply you can say those are the values. If you say some answer, I'll say something else. You should accept. Okay, or else you can change you can say something else. I should accept with you. Because there is no clarity on that information. So now what I'll do is I'll say 10,000 are rupees. I'll say INR. Now I can say 10,000 I written INR means I should accept 10,000 rupees. So I'll say 20,000 is dollars USD. And what about 30,000? 30,000, or I don't give 30,000. I'll say just 500. What is this 500? I'll say marks. You should accept. Sorry, marks. Okay, 10,000 rupees INR, 20,000 dollars USD, and I am writing 500 as marks. Yeah, all are correct. Now if you look into this, the first two values 10,000 and 20,000 are related to currency. Okay, 10,000 and 20,000 related to currency, and 500 is related to currency. No, rupees and dollars are or any other currency related. Okay, these all are rupees. Here if you take this example, these rupees and dollars are related to currency measurements. Do you think marks are related to currency measurement? No. Okay, that means which are related to currency measurements, that we can call as monetary related measurements. Okay, monetary means currency, right? So these rupees and dollars you can treat as a monetary measurements, but monetary means currency. These marks are not related to monetary measurement. This is non-monetary measurements. Okay, non-monetary measurements. So whatever the value you have, non-monetary measurements, here I taken just as a marks. Otherwise I can say this 500 as kilometers. That is also non-monetary measurement. Kilometers not related to currency. Or I can say 500 square feet. That is also not related to currency related measurement. Non-monetary measurements. Or anything you can take. Okay, liters, millimeters, centimeters, grams, or kilos, or tons. Okay, anything you take, any other measurement other than currency measurement. These rupees and dollars are related to currency measurements. Other than these measurements, what are the other measurements we have? All those measurements as per Oracle system and generic way, what Oracle says, you treat that is not currency, but treat that is stat currency. What to treat? If you are going to enter in the system saying that 500 marks as per our system, we have to treat that is not currency, but what Oracle says is treat as a stat currency. Stat means, stat stands for statistical. From the term called as statistical, they take in the first four letters prefix, so that we are calling as statistical. It means marks means statistical information. Say 500 square feet, statistical information. Kilograms, meters, millimeters, centimeters, all related to statistical measurements. Those measurements also will be treating in our system as a currency, because we have separate concept to work on it. At that time you can understand, but now you don't need to focus on that. Just try to understand there is one currency called as stat currency. Stat currency is nothing but it's not real currency. In our system, whatever the measurements will be entering other than actual currency measurements, those will be treating as a stat currency. Now what about these two? These are currencies only, rupees and dollars. Now let's take simple point. Say we are running the business in India. We are running the business in India. If you are running the business in India, what is our local currency? INR. So now INR you can call as local currency. So we are running the business in INR India only. So INR we are calling as local currency. Say we are not doing any business in US. Now if you are doing the business in India, Other country currency always we call as foreign currency. Okay, USD is foreign currency for us. Okay, so foreign currency. So we are doing the business in India. So India has a local currency. That local currency we treat it as, we call it as functional currency. Okay, we call it as functional currency. Wherever we are not doing the business, that country currency generally we call as foreign currency. That's it. So the simple classification as per our system, what we have to understand, there are three type of currencies: functional currency, foreign currency, stat currency. What do you mean by functional currency? Wherever we are doing the business, that currency always we call as functional currency, nothing but local currency. The country local currency where we are doing the business, okay, that we call as functional currency. So say for example, we are doing the business in India. What is our functional currency? INR. Say we are doing the business in US. What is our functional currency? USD. Okay, so that's how we have to understand what is the meaning of functional currency. Functional currency is nothing but local currency. Say we are doing the business in India, so our functional currency is INR, and in that case USD we call as foreign currency, and say GBP we call as a foreign currency, AED we call as foreign currency. So where we are doing the business, in which country we are doing our business, that country local currency is functional currency. Other than functional currency means other than local currency, all currencies will treat as foreign currencies. Now take simple example. We are doing the business in India and US. For India, INR is local currency, means functional currency. For US, functional currency is USD. For India, okay, for India, INR is local functional currency. For India, USD is foreign currency. If you are doing the business USD and India, for US, INR is foreign currency. That means other country currency always is foreign currency for a country where you are running the business. For India, USD is foreign currency, but for India, INR is functional currency. For USA, USD is a functional currency, but INR would be foreign currency. This is what we have to understand. Stat currency means already we discussed. Okay, the which values got non-monetary measurements, that all we call as stat currency. The reality, stat currency is not a currency at all, but just we have to treat in the system as a currency. So finally, simple point is, as per our system, you can just classify currencies are three types: functional currency, foreign currency, and stat currency. Functional currency means local currency, foreign currency means other than local currencies, all currencies we call as foreign currencies. Stat means the values, the measurements, or else the statistical information we treat as a stat currency. That's all. Okay, done. Okay, this is what we have to understand. So I'll just take you through these slides. So already I shown how to create the accounting calendar, but we'll be creating in the system. I want to show you the screen, that's all. So done. And when I talk about, we discussed about chart of accounts. If you want to create chart of accounts, general ledger application, we have accounting key flexible. By using accounting key flexible, we'll create the organization structure, we'll create segments, and we'll create the segment values. For that, I just have a few slides for you to demonstrate. Let's go through that, but don't try to understand much from that. Just see and leave it. So this is a place where we can create our chart of accounts. See, application is general ledger. Within the general ledger application, which feature we have? Accounting key flex field. So here the naming convention, that display name they given as accounting flex field, but the actual name is accounting key flex field. Within the general ledger application, we have accounting flex field. Actual name is accounting key flex field. Display name they given as accounting flex field. Within the accounting flex field, what we have to create? Structure, organization structure. Here I taken one sample, ERP tree accounting structure, or you can call as organization structure. So under organization structure, what we have to create? Segments. Here the sample, just the screen I taken. These are the segments. Company, department, account. This is how we'll create. Don't look at other points. Later we'll see that. Okay, just I want to give you the simple how the screen looks like. But when you are going to create, you can understand more detail level. Okay, so these are the segments. Company, department, all these we call as segments. For each segment, we have to maintain the segment values, right? Here, just I given the slide where you can see company segments, company, ERP consulting, ERP development, ERP software. These are the company segment values. These are department segment values, administration, contracting, assets, some parent department I given here. The same way accounts, cash account and other different payroll cash account, different accounts we have here. Okay, this is how, okay, we can create the structure. Okay, within the chart of accounts, we can create the structure. Under structure, we can create the segments. Under segments, we can create company segment values, department segment values, and account segment values. Okay, the same we discussed here. Okay, application under that accounting key flexible. Here we are discussed as accounting key flexible, but there we have seen the name as a accounting flexible. Display they are giving like that. And under that, we gone through that. We will be creating the account organization structure under the segments and segment values. These three we call as chart of accounts. Okay, we call it as chart of accounts. When you have chart of accounts information ready, system will allow us to capture any transaction more detail level. Now, what are the transactions you are recording? Will be entering the amounts. The amounts you have to specify with the currency, rupees or dollars or what exactly you have to specify. When you are before you go and specify, just simple point to understand is what type of currencies we have in our system. Normally we'll be treating the currencies as how many types. This is how we'll be treating when we are working in our application. So functional currency, foreign currency, and stat. Functional means country local currency. Foreign means other than our local currency, all other currencies are foreign only. Stat means reality is not a currency. The statistical information like marks, kilograms, square feet, meters, centimeters, all we call as, okay, statistical measurements. The statistical measurements Oracle given the name as in our application stat currency. Okay, so when you talk about the slides here, so this accounting calendar we have to create. The chart of account structure means structure, segments, segment values, all we have to create. Okay, but when you talk about currencies, it can be functional or foreign currency. We no need to create. All currencies are available in the system. So just I given the point as the currencies, what are the information by default will be available in our application that we call as basically seeded. Seeded. What Oracle provides that we call as seeded. So to record the transactions, we have to create our own accounting calendar. To capture the description of the transaction, we have to create our own chart of accounts. But to specify the amounts or belongs to which currency in the system, currencies we no need to create. For all the countries, okay, the currency is unique code we will be having for each country. For each country will be having unique identification. Say for India, code is INR. Okay, for rupees the code is INR. For dollars, USD. This is how, like, for each country we have unique code. So those codes are always fixed, we know. So that is the reason when Oracle is providing, just delivering this product, along with the product they are included all the currencies and they are delivering the product. That is the reason you no need to create any currency. System will allow us to create the currency, but we should not create. Okay, I should not create. System is allowing, I should not go and create saying that Lakshman INR or Lakshman USD. There won't be any that kind of currency which is valid. Okay, so currency codes are fixed. Whatever available in the system, the same we have to use. Remember this point. You should not create any currencies. Sorry. Okay, so this is the point we have to understand. Fine. That means now if you want to create any transaction in the system, what we require? We require accounting calendar. Let's say just accounting calendar only. Let's call it as just calendar. Naming convention they're given as accounting calendar, but generally you can treat it as a calendar. By using the calendar, you can capture the date. To capture the description of the transaction, detailed information, the transaction belongs to which company, department, account, we should maintain the chart of accounts. COA. Okay. And okay, with the calendar, you can capture the date. With the chart of accounts, you can capture the description. But again, we'll be entering the amount also for each and every transaction. The amount should be represented with currency. That means when we are creating the transaction, before you go and create the transaction, you have to keep this information ready in our system. If you keep calendar, chart of accounts, and currency information ready in the system, we can go ahead and we can record the transaction in our application. So calendar for date, chart of accounts for description, currency to specify the amount. Already we discussed we have to create our own calendar, okay, and we have to create our own chart of accounts. Just now we taken simple example. Here we taken 3 segments: company, department, account. Depending on company, we'll decide how many segments we require. That I'll discuss very detailed level in upcoming sessions, but now you no need to worry about it. Here you have to understand what is the meaning of segments. Okay, so we have to create our own calendar, we have to create our own chart of accounts. Anyway, we'll be doing everything in our system, but before that I'm just giving some information to understand. And when I talk about currencies, we no need to create. See, calendar we have to create. Okay, calendar we have to create. Chart of accounts, yes, we have to create. We have to create chart of accounts in the system. But when you talk about currency, you no need to create currency. All currencies are available. What we have to do? When you talk about currency, which currency you require as per your business, that currency you have to enable. See here, USD is enabled. If you enable the currency, that currencies only will be available when you are recording the transaction to specify as that amount is belongs to so and so currency. All currencies are available in our system. Until unless you go and enable, you cannot use that currency. So currencies we don't need to create, just we have to go and enable. That means we have to activate them so that those you can use as a part of transaction. So we have to enable. Okay, so calendar we have to create, chart of accounts we have to create, currency we have to enable, so that by using these 3 components, now I call these 3 as a components. Calendar is one component to capture the date, chart of account is another component to capture the description of the transaction, currency is another component to specify the amounts are belongs to which currency. If you have these 3 components, you can record the transaction. Just try to understand this point. I'll be adding some additional points also to this. Okay, I'll be adding some additional points also to this. For now, the simple understanding here is by using calendar, chart of accounts, and currency, we can record the transaction in the system. If you notice here, calendar is starting with C, chart of accounts are starting with C, and currency is starting with C. Now my definition is by using calendar, chart of accounts, currency, we can create the transaction in the system. Instead of saying that, I want to simplify my definition. So what I call is, these 3 are starting with the C. Here calendar C, chart of accounts C, and currency C. Instead of saying by using calendar, chart of accounts, and currency, we can create the transaction, I want to say, okay, the simplified manner. For that, what I'll do is the 3 I call as 3 C's. Okay, those 3 I call as 3 C's. Sorry. First letter we are considering C, 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 3. That means I am calling as 3 C's. Now my definition is, I'm changing my definition. Instead of saying calendar, currency, chart of accounts, I'll say By using three C's, we can create the transaction. Now I simplified the definition. So what do you mean by three C's? Calendar, currency, chart of accounts we call as three C's. How to create the transaction? By using the three C's. Okay, by using the three C's. Already we discussed one point. Other than GL, all applications we call as subledger applications. Subledger applications. Application point of view, we have a classification as a subledger and general ledger. Subledger applications. Examples: other than GL, all applications, say AP, ER, CM, FA, PO, OM, inventory. From our discussion, I am taking these applications. Okay. Subledger applications means other than GL. Other application is general ledger. GL. General ledger. Okay. So now the point here is GL is separate, general ledger, which will get data from all the other applications. All other applications we are calling as subledger application. Now the simple point here we are discussing, by using calendar, currency, chart of accounts, we can create the transaction. I want to simplify the definition. Since these three are starting with a 3C, okay, I'm calling it as 3Cs. Now I'll say by using 3Cs we can record the transaction. The same definition I'm going to apply for this. So we can create the transaction by using 3Cs only in general ledger application. Okay, remember this point. By using 3Cs, we can record the transaction. Where we can record the transaction? In general ledger application. By using 3Cs, we can create the transaction. The transaction you can create in general ledger application. But in the real time, when you are normally using those applications, we have to create already we discussed which transaction where we have to create. We discussed in AP we have to create the transaction called as invoices and payments. Here sales invoice and receipts. In fixed assets and depreciation, cash management. We may not create transaction, we'll perform the bank statement reconciliations. In PO, what we do already we discussed. Okay, requisitions, purchase orders, receipts. In OM, sales orders and inventory. So inventory related transactions, everything will be recording. So if you want to create the transaction in the system, we need 3Cs. Yes, that is true. But the 3Cs you can use to create the transactions in general ledger only. If you want to create the transactions in subledger applications, 3Cs are not enough. Remember, try to understand this point, simple point. Okay, if I want to create any transaction in the general ledger application, 3Cs are enough. What are those? These three. But if I want to create the transaction in subledger applications, the 3Cs are not enough. The 3Cs are not enough. Along with the 3Cs, we need one more component called as accounting method. Please make a note each and every point what we are discussing, not only what I am writing, whatever I am trying to explain to you, that point also please make a note. Really that will be useful for you for your preparation and everything. Okay. So the simple point here is to record the transaction in the general ledger application, 3Cs are enough, these three. But if you want to record the transaction in any one of these subledger applications, along with these 3Cs, what we need? Accounting method. Okay, accounting method is required. So by using these 4, we can record the transaction. By using these first 3, we can record the transaction here. Now what Oracle says is, anyway these 3 we are calling as 3Cs. Okay, why don't we ignore A and why don't we treat the second letter C as a 4th C? That's what Oracle says. Okay, A we are ignoring. I'm going to count this second letter C as one more C. That means 1, 2, 3, 4. So these 4 C's I am treating. First A, but actually we have to treat, but Oracle is not saying as 3 C's and 1 A. Oracle is not saying that. Oracle is saying this also you treat as C. Already these 3 are C's. Okay, nothing wrong. So what Oracle says, these 4 C's we have. If you want to record the transaction in general ledger, 3 C's are required. First 3. If you want to record the transactions in subledger application, these 4 we require. This 4, this fourth one also we are treating as C. That means we call as 4 C's. This is the point we have to understand. Okay, we have subledger applications and general ledger application. Okay, don't start thinking on what is general ledger, what is subledger, how these are totally different and all. You'll understand. For now, the point try to understand. You'll get complete clarity what you are expecting. I'll just make sure that you will be very clear on each and every concept. Just you have to wait for some time. That's it. Okay, here the simple point is, by using 3 C's, we can record the transaction general ledger application. With the 3 C's, you cannot record the transaction subledger applications. If you want to record the transactions in subledger applications, along with these 3 C's, we need 4th C, that is nothing but accounting method. Okay, by using, if you have 4 C's, where you can record the transactions, you can record in transactions in the subledger applications as well as general ledger. In general ledger anyway we need 3 only, but we have 4. Why can't we record the transactions in general ledger? That means if you have 4 C's, always you can record the transactions in any application. That means you can record the transaction in any application by using 4 C's. For GL 3 are enough, but when we have 4, why can't we record in GL also? Okay, that is the point we have to understand. Now my question is, if you want to record the transaction in the application, it can be any application. How many C's we require? 4 C's. That is the final point what we have to take from here. And here let me add one more point. Okay, and don't just we'll get into this, what is the accounting method. We are very clear on calendar, we are very clear on what is the chart of accounts and currency, but what is this accounting method? Okay, that I'll take you very detailed level when we are working on subledger application. But for now, to give you simple understanding, okay, what is the meaning of accounting method? Okay, this accounting method, in other words, you can call as subledger accounting method. Okay, sorry, you can call it as subledger accounting method. Accounting method or subledger accounting method, both are same. The accounting method where we use in subledger applications, we use this one in subledger application. That is the reason we are calling as subledger accounting method. So what will be there inside of this subledger accounting method or accounting method? When we are recording the transactions in APR, CM, FA, PO, OM, inventory in these applications, how accounting entries, which account should get debited, which account should get credited, those all rules will be there. Accounting related rules will be there inside of that one. When we start working on subledgers, I will explain you detail level. Now you don't need to worry about it. The simple point you have to understand, in accounting method or say in subledger accounting method, we will have accounting rules. Say a simple example, in AP I am going to create invoice. When I am creating invoice, okay, which account system has to debit, which account system has to credit. When we are making the payment, when we are creating the payment, which account system has to debit, which account system has to credit, that you no need to decide. Okay, in the system Oracle already written required rules, they programmed everything. Okay, they programmed everything. What you have to do is just you may input some information, that's it. The complete rules are predefined in the system. That is the reason when we are working on these applications, okay, so we no need to be very much sound in accounting. That is the reason the people who has background of technical background, say BTech, MCA, those people also doing these courses, those are just becoming our competitors in the market. So it's very simple. The accounting will be handled by system, but if you know some accounting information, if you have some accounting background, that will be added. But nowadays we know even the people who has accounting background, most of the people we can see in the market, please define what is income statement, they don't speak anything. That is a well-known fact in the market. Okay, that is the reason you no need to worry about even if you don't have accounting background. Once you go through it, you will be learning required things, and more than that, if you want to learn, we'll discuss where you have to focus and what you have to explore. Okay, no need to worry about if you don't have any accounting background. That is a simple point. You have to understand the product, how it works, the accounting point of view, how it behaves, that everything will be discussing in our classes. Okay. So what is the use of subledger accounting method? Within the subledger accounting method, we will have a rules. The rules, what rules? When we are recording the transaction, the subledger applications for each and every transaction, which entry you should, which account system has to debit and which account system has to credit, all the predefined rules will be there. You no need to create it. However, Oracle is providing the all currencies as a seeded, means all currencies will come along with the product. When you take the license from Oracle, all currencies will be available. In the same way, accounting method also available. You no need to create your own accounting method. If at all you want to change something, you can modify it. That I'll show you in the system how to do it, but generally you no need to create it. That means to create any transaction, we require 4 C's. It can be GL or subledger application anywhere in the system. If you want to create any transaction, GL 3 enough. Already we discussed. Okay. So by using 4 C's, you can create the transaction in the system. Let's take this as a final statement. Okay. To create the transaction in the system, we require 4 C's. Out of 4 C's, when we are going to work on the system, how many we have to create? Only 2. Calendar we have to create, and chart of accounts we have to create. All currencies are available, you have to enable it. Okay, accounting method also available. Okay, you can use it. How to use it and all we'll be discussing. Okay, done. Now just we are simplifying the definition. By using 3 C's, you can record the transaction general ledger. By using 4 C's, you can record the transaction subledger. Ultimately, you can say by using 4 C's, you can record the transactions in any application. Now, what we can do is these 4 C's. Okay, these 4 C's you can group. You can group these 4 C's because all the time these 4 are required, right? If I'm going to record the transaction AP or AR or FAPO, OM in any application, all the time these 4 are required. If I'm recording the transaction, I cannot ignore date. If I'm recording the transaction, I cannot ignore description. If I'm recording the transaction, I cannot ignore currency. If I'm going to record the transaction in the subledger application, I should follow accounting rules. The rules are predefined in this. This will be helping us to system to create accounting entries by following those rules. That is the reason if I'm going to record any transaction, I have to include all these 4 components as a part of transaction. So that is the reason these 4 are always required. When these 4 are always required, we can group them. So by grouping these 4 C's, okay, what we can create in the system is primary ledger we can create. Okay, we can create what? Primary ledger. Short name is PL. Please make a note of all these points, not what are the point I am highlighting and saying to make a note. Each and everything. If you are really interested, if you want to get benefit out of this, take each and every point. You have to copy this Excel. More than this, you have to write, because everything I am not writing in this. I am speaking something. Apart from this, on top of it, I am speaking. That also you have to keep into your note. Okay, that's up to you. Just I am telling from my side. That's all. Okay, the simple point is by grouping these 4 C's, we will create the primary ledger. Now, if you ask me the question, how to create the transactions in Oracle applications, my answer is by using the primary ledger, we can create the transactions in any application. That's all. That's my final statement. Okay, how to create the transactions in Oracle applications? In any application. Okay, by using the primary ledger, short name is PL. By using the primary ledger, we can record the transaction. That is the meaning of ledger. So when we are recording the transaction by using the primary ledger, all the accounts related information, all the companies, okay, all the departments, all the accounts, okay, different currency related transaction information will get stored in the primary ledger. The primary ledger belongs to general ledger. Okay, the primary ledger you can create within the general ledger application. That's it. Okay, by grouping these 4 C's, we can create the primary ledger. Where we can create the primary ledger? Within the general ledger application. So this is the point we have to understand. How to create the general ledger, primary ledger? primary ledger within the general ledger application. I'll just anyway in the class we'll see that. For that I just given one slide how the form looks like. Okay, where we create the primary ledger. This is the place, because I just mentioned here the primary ledger which is already created. I just give you the name as ERP3 primary ledger. Okay, just for information, just to feel as though this is how just it looks like the screen and all I just mentioned here. But anyway, we'll go each and everything very detailed level, step by step, when we start working on the system. Okay, so just I want to introduce some naming convention. I want to introduce the slides, so the screen sounds looks like in our application. That is the reason I taken all these slides. Okay, otherwise I'm not going to show you this. This is how we'll do, this is over, nothing like that. So in our training what I'm going to do is, I'm not frankly speaking, I'm not going to take the training by showing certain things which are existed generally in the market. I'm not saying I'm doing great job, but I'm telling what approach I'm following. Generally in the market what happens is many things, okay, people will show this is how we have to create, is already created, let's proceed based on this. That's how it happens. But now in my classes what I'm going to do is, when we are working in real-time project, what approach we follow, from where to start, how to start, that approach I'm going to follow here. And other point is, in very beginning sessions, maybe initial 2-3 sessions, to give you the better understanding, we will depend on what already created. Once you understand, then I'll take you through from scratch how to start with each and everything. Okay, because I don't want to confuse you. That is the reason initial 1 or 2 sessions, once we get into the system, I'll be referring existing forever in understanding. Once you are clear on that, then I'll take you from the scratch how we'll be working in the real time. Okay, that's how I'll be taking through this. After this training, for sure you'll be able to work as a implementation consultant. It can be implementation project or support project. We have different type of projects and we will be discussing in real-time classes, whatever we schedule in this training. Okay, so this is all about today's session. If you have any questions, please ask me. Any confusion or any clarity you require, please ask me. Just focus on what we discussed. Don't try to understand beyond what we are not discussing. Okay, just try to understand this terminology and what is the meaning. When I talk about calendar, only the point you have to understand, to create the calendar, year type and period type, you have to be very sure. What do you mean by year type? How to decide? Based on the country financial year. How many type of year types you have? Physical and calendar. Depending on country financial year, you will be selecting year type. And period type, you can decide what is the period you are choosing. I mean, what is the which you are treating as your period. It can be month or day or week or semi-month, or it can be quarter or off yearly, which you are treating as your period. Based on that, numbers will be decided. The same we have to create in the system. With the help of year type and period type, we can create accounting calendar. Just I shown that slide how we create, just information, but we will be creating everything in the system once we enter into the system. Now completely we are outside of the system. We are discussing certain things which really we have to understand before getting to the system. If you are clear on these points, once you get into the system, you don't find what is this, what is that. More or less, we'll be finding, oh yes, this is what we discussed, that's what the same we are doing here. That's how you'll be getting more confidence once we start with this, what the definitions or creations in the system. Okay, so that's what that kind of experience I want to give you. Okay, when you enter into the application, that's the reason I'm explaining all this. Okay, directly if you jump into the application, everything will be confusion for you. So once we're done with the accounting calendar, okay, we have to work on chart of accounts. Chart of accounts means structure creation, structure creation, segments and values. Okay, I'll be adding few other points also once we really, when we are entering, where we are creating all those things. If I give everything this stage, you will be start thinking, no doubt on that. Okay, you should remember, you should understand in this stage what that only I'm giving. Okay, I'll be adding whatever required once we reach that stage. Okay, so these all we are calling a chart of accounts. Those all we can create by using the feature called as accounting key flex field. This and all we can create in the general ledger application. Okay, so that means final point is, by using the chart of accounts, you can capture the description of the transaction. and currency. Okay, when I talk about currency, so when you're recording the transaction, what are the amounts you are entering, those will be represented in the currency only. Okay, all currencies are available in the system. You don't need to create, just you have to enable which currency you require in your company transaction process. So you may run the business in India, okay, and you sometimes will have a transactions with other country vendors or other country customers. In that case, you'll be using your local currency, nothing but functional currency. Along with that, definitely will be having the transactions with the foreign currency. So in which currencies you are going to record the transactions, all currencies you have to enable. Okay, but one currency is always mandatory, your country currency, that is a local, the same you can call as functional currency. Already we discussed what is the meaning of stat. Stat nothing but statistical currency, other than currency measurements we call as stat currencies. Okay, so that's what we discussed. Calendars we have to create, chart of accounts we have to create, currencies we wanted to create, we have to enable. So by using these three C's, we can create the transactions only in the general ledger, the real time, and the normal business. The actual transactions all will be creating in the subledgers only. In the GL, what purpose? Reporting purpose. Already we discussed. Of course, apart from reporting, there are some other purposes also, but those are not that much primary when you compare with these transactions. This is the core business activities happens in the subledgers only, right? So if you want to create the transaction in the subledger applications, along with these three C's, we need one more C called as accounting method. By using these four C's, you can create the transactions in the subledger applications. By grouping these four C's, we create primary ledger. In short, we call as primary ledger, PL. So the final point is, by using the primary ledger, we can record the transactions in our Oracle application. This is the final statement to understand. Based on this, if you have any questions, you just please ask me. And one more point I want to tell you for sure. So if you are really serious about it, tomorrow if I'm going to ask you, okay, where we can create the chart of accounts, you should be able to tell. Where we have accounting key flex fill, you should be able to tell as a general ledger. And what are the currency types we have, you should be able to tell. That's how you have to prepare and you have to get ready. How many year types we have and what base you will classify. Okay, these and all you should be able to answer. Then the further classes, it will be easy for you, and that would be good learning. Anyway, we know that point, but just I'm just trying to stress on that. Okay, so that's all for today. If you have any questions, please. Any questions on today's session, please? Any clarification you require? It may be a very funny question. That's very simple. You may treat it's a nonsense, I should not ask. But my request is please ask. Those points only we have to understand in this stage.
Hello, sir.
Yeah.
Sir, the fourth C, can we call as a conventional accounting method, sir?
Yeah, you can call it as, that is a technical term. When you say conventional, that is a technical term. Okay, but don't call with that name. That is a technical term. You should call it as accounting method. Even in Oracle application also you can see as accounting method. Nowhere you can see Oracle written as a conventional method. That's it. Okay, so that's what I am not introducing all those terms which are not required to understand. Okay, so accounting method. Fine. Any other questions?
Hi, Lakshman. Can I know the difference between primary ledger and general ledger?
Okay, good question. General ledger is one of the application. Okay, already discussed, right? General ledger is one of the application. Within that general ledger application, one of the feature is primary ledger. General ledger is application name. Primary ledger is as a part of general ledger. This is one of the feature which is required to record the transactions. If you have just general ledger, that is application, you can store the data. Okay, but if you have primary ledger, that will be useful to record the transactions any application. Okay, that's what you can understand for now. Once we get into the application, you'll get more clarity if you are not able to just correlate my definition. Simple point, don't try to understand more than this now. Okay, general ledger is one application name. The general ledger application, primary ledger is one of the future. What is the purpose of this primary ledger? Already discussed. To record the business transactions in any application, it may be in the GL or subledger application, primary ledger is required. That's all. Any other question? Any other questions on today's session, please? Any sort of question. See, it may not be related to today's session. Maybe yesterday's session. What we discussed. We discussed about P2P cycle and O2C cycle. Your question may be related to that. The question may be related to our entire course. I mean, you want to, so if you have some, if you need some clarity, or if you want to understand something, some information related to this complete this program, what we are doing as a training, you can ask me the questions on that. Any questions, you can ask me. Okay. If you don't have any questions, okay, you can just we can wind up the session for now. Anyway, I'll be available in this meeting for 5 more minutes to take your questions if anybody is going to ask after some time. Okay, I'll be available. You can ask me. I'll be available for 5 more minutes. Okay, then that's all for today. Okay, see you in next session. The next session would be on Monday. We know like the classes will be running from Monday to Friday. Okay, we have classes from Monday to Friday. Okay, so we'll see on Monday. Okay, so then that's all for today. See you on Monday. Have a good day and good night respectively. Okay, that's all. Thank you all.
Yeah, Lakshman.
Yeah, Rafi.
Hello.
Yeah,
Yeah, when can I get a soft copy for this?
you are talking
Yeah,
about
I need soft.
videos, right?
Yeah, a soft copy. Yeah, material.
Yeah, I'll be sharing already 2 videos we shared through YouTube link. As I informed
Okay.
yesterday, up to 5-6
Okay.
sessions will be sharing through YouTube link only. The initial sessions we request you to browse from YouTube only. After 5-6
Okay.
sessions, will the total batch will get finalized. From that time, right from beginning, from first video, I will be sharing through Google Drive. You can download. Okay.
Okay.
Yep.
No. What I'm asking is, I want soft copy for this. If you have any soft copy for this,
No,
can you share?
we don't have any soft
No.
copies. We don't have any
Okay.
soft copies. Yeah.
Okay. Thank you, Lakshman.
Because see, simple point. What are the classes I am taking? Those classes are summary of too much of soft copy information. Again, if you want to struggle, you can go with the soft copy and all. If you want to understand in the easiest way and just very key information and better way, my classes are best thing which you can take. And if you want to go through that, see, if you want to, when generally, definitely when we are working in real time, based on the concept, definitely you have to explore and you have to do that. For that, lot of documentation is available. Now if you go and go search in the Google, there are many documents available officially from Oracle. I'll show you that link. You can download and you can go through it, but take as a primary source as
Actually,
my
no.
classes. Okay, so that will be very useful for you. Yeah, tell me, Rafi.
I'm very clear, really. Thank you.
Only the point is, my suggestion or request is, don't look for something else for now. Apart from this, you complete the training, and whatever you are learning from this training, if you are okay, please let me know. I'll guide you what to do, what else to do, to become more and more expertise in that. But my classes will make you expert, no doubt
Thank
on
you.
that. Yep.
Okay. Thank you.
One point I'll tell you, just take my course content and show to somebody who is working in real time, and you just hear feedback from them what they says.
Okay.
That's it.
Okay. Thank you.
Yep. Thanks.
Good night, Lakshman.
Yeah. Thank you. Good night. Any other questions? Fine.